Alright, good day everyone. This is Hongkong Land Holdings Limited interim management statement dated 23rd May 2024. Right, they are trying to report the first quarter results. Okay, so for first quarter, they say that results are mostly in line with 2023, right, with contributions from the investment and development property businesses broadly unchanged. Right, so investment properties wise, there's better performance from the luxury retail portfolio side and Singapore office, but it's offset by low contributions from Hong Kong office. Right, but this is the part where it's worrying. Right, China side, okay, they say buying sentiment towards the retail residential sector has continued to deteriorate with reduced sales and pricing. Right, so this sounds very bad. Okay, so interest in contracted sales is down 36% in the first quarter as compared to 2023, and contracted sales for full year are now expected to be lower than 2023 levels, and profit margins will be impacted by the reduction in sales prices. Okay, so they are doing an extensive review of the group's projects, okay, because of this pretty bad news over here. Okay, and they expect impairment value. All right, so the impairment charge is already expected to be around 200 to 300 million dollars. All right, just for the first half. All right, so this is quite bad. Right, I think this is quite bad. All right, because if you look at the numbers here, right, for last year they only made this amount of operating profit from the development property side. Right, you can see the impairment is already like around that size. Right, so I don't know whether the DP side will become red color this year or not. Right, and this is only first half. Right, so they say underlying earnings in the period will be significantly lower than in the same period in 2023. Right, so yeah, we're not very we're not expecting very good results from the DP side lah. Right, but they say their finances are still strong lah. Okay, this is not a company that will go belly up. Right, gearing is very low, 16%. Right, and they have liquidity. Right, so they talk a little bit about what's going on, the details. There's not much changes lah. Okay, so some improvements in terms of vacancies. Yeah, but rental revisions for the Hong Kong side, right, this is for the Hong Kong side, is still negative. Right, they say that they have secured long-term leases lah, so hopefully there will be less negative rental revisions moving forward. Okay, so very few leases left to renegotiate in 2024. Right, so yeah, the retail side is doing okay. All right, but again, I won't read too much into it lah, because it's first quarter of 2023. I think that period, the improvement over this period is the COVID period, whereby I think Hong Kong was probably it is fully open, I think, in the same time as China, which is January, but I think they probably had the same problem as China with the COVID situation not very well managed lah. So I suppose the improvement is expected lah, and I wouldn't read too much into it lah. But hopefully this is a good thing for the retail side moving forward lah. Maybe some good news for MPAC as well lah. At least it's not negative. Right, so retail side is doing better in Beijing. Alright, but Macau is slightly slower results. Okay, Singapore is strong, no need to worry about Singapore. Right, so yeah, that's all. Right, so looking at the results, I'm a little bit more concerned now about the maintenance of their dividend. I'm not sure if they can maintain dividend for 2024 lah. Not as optimistic as I first was, alright, in the last presentation. Okay, so yeah, please remember none of this is financial advice. Right, with that, thank you for listening.